Hi everyone, this is Shankara Manepalli. I'm one of the founders of Vibu Venture Partners, and then I also have my other founding partners, Satya Anantu. Before we get started, I want to thank Ricky for organizing this. And also Hannah for administering and then organizing this Zoom event. I'll briefly cover what we do, and then I'll ask Satya to add anything else he wants to do. And then we will jump into the opportunity that we have for Neuralink, to invest in Neuralink. And then we'll address any questions. So that is the agenda that we're looking at the moment. Hannah, does it align with what the participants are expecting? Okay, I would assume that that is yes, because she's in the... Hi everyone again, I'm Shankara Manepalli. I'm one of the founders of Vibu Venture Partners. What we call ourselves is a micro VC, a micro venture partner, venture capitalist. So usually the venture capital is associated with investing in very startups. Usually that is those are in millions, like the investments are in million. A venture capital simply has the ability to find out which are the startups that are doing, which are promising startups, and VCs usually have a good network of high net worth individuals who are willing to part their money for high risk investments. Like these are high risk as well as high reward. Just to give you an idea, a $5,000 investment in Uber may have got you like 5 million or 25 million, depending on when you've invested in Uber. At the same time, there are thousands of other companies that perish along the line because they don't necessarily survive. The ideas may be good, the time may not be appropriate, the execution may not be appropriate. So VC investment in general comes with very high risk. High risk. So having said that, so one more important thing to note is these investments in US are only available to accredited investors, which mean, there is a definition of accredited investors, probably most of you may be aware of. In general, like you would have to have at least 250,000 of annual income in the last 2 years, or a net worth of at least $1 million. So, there's a reason that was set up, because the investment could totally go to zero. It's high risk, and then even we don't recommend that you invest a significant percentage of your money in this one. We are not an advisor, but the general rule is like we don't invest. We invest a little bit of our investment in VCs, and then you spread it into multiple companies, so that you're diversifying your risk in multiple opportunities. Usually, VC funds are spread into multiple companies, so that the risk is diversified. So now in this particular case, so let me go back to our company. We started in late 2020 and early 2021. We call ourselves micro VC because the check size from our investors is usually in the range of 10,000 to 100,000. I mean, we have investors who have done more than 100,000, but that's the investment check size. Since we are a small player, we don't necessarily have a direct access to the company. We would have to go through some other players who have access to the company shares. Now, there are two ways that we could have access to this company shares. One way is through usually the established VCs. They have a time frame, like they operate in 8 to 10 years, and then if the startup they have invested lasts longer than that, they want to liquidate their shares, and then that's what we call it as secondary market. The primary market is you're directly buying from the startup, and then the secondary market is where you're buying from either initial investors who are trying to liquidate some of their position for whatever may be the reason. And then the second source of this is the employees in the startups. They're allocated shares, and then after a certain period, they're allowed to sell these shares. So either we acquire these from employees or the early investors, like who are trying to get out of it and then take some profit out of that. We have done in the past. We have done multiple companies. We do investments in individual companies through secondary means, which is through VCs who are early investors who are trying to come out, or employees. We've done that for SpaceX. Like, SpaceX is one of our biggest investment. We've done very well. The returns are very attractive. We've invested in SpaceX when the valuation was around 50 to 60 billion, and currently the valuation is running anywhere from north of 100 billion. We've done Stripe. Stripe is very well known as well. The valuations were pretty high when we invested. Since then, there have been some corrections. And then what we have done is, so we have done few individual investments like this, and we also launched a fund where we invest in 10 to 15 companies to spread the risk across multiple companies. So there are some more. If you could scroll down, Hannah, we'll see some more of those companies, like where we've invested. So the 2019 fund is an earlier fund, and there's additional. If you could scroll down further, like. Satya, do you have the list that we invested in for the Consumer Plus and FinTech Plus over here?
I don't think we updated, so there might be some companies missing.
Sure, and then I'll quickly complete here. Now, this Neuralink is a very special opportunity because we've been trying to acquire a good source of Neuralink for the last year or so, and then finally we were able to get a allocation that is quite attractive at the market, whatever market is, and we have certain terms. Usually, the way it works is when we want to invest, we form a company. It's called a special purpose vehicle. In simple terms, it's an LLC. Like most of you may be familiar with an LLC. According to the regulations, government regulations, we can have up to 100 investors. So the investment is limited to 100 investors. Since we form a company, we need to Hannah, if you could mute that person. Yeah. So since we form an individual company, we need to it's a registered LLC, and we need to file taxes every year. We need to have a regulatory compliance. Then we need to also do any state registrations that is necessary to stay active. The company, for this kind of investment, we open a bank account, we invest the money, and then we acquire shares. The company that we've created owns those shares, and then say, for example, like there are 100 people who invested $1 million. Like let's say that everyone has invested $10,000. Then each one owns 1% share in that company, and when the exit happens, when the IPO happens, or when an acquisition happens, the returns come in, and then the returns are proportionately shared with the investors. Now, there are two ways that we make money from this. One is called the carried interest. This is where if you put in $10,000, and then if it becomes $100,000 after whatever many years, like the 90,000 profit, you would have to share with the people who made it happen, the companies that facilitated this deal, or the original investors itself. So the original investors may sell the shares, but they still maintain some carried interest. So between all the parties who are helping us make the deal, that carry is shared. And the second thing is to manage the company, we need certain money, and then we charge 8% of the investment for managing the fund. I'll stop here. Satya, please feel free to jump in and then introduce yourself. By the way, I most of my career I've been with startups. I was a founding engineer in IPCell Technologies. We were acquired by Cisco in 2000. Since then, I went to IIT, Indian Institute of Technology, one of the most top schools in India, and I moved to US in '97 on a work visa. I'm a US citizen, and I did my MBA from Northwestern Kellogg School of Management. At the moment, I'm just pursuing my passions. Most of my time goes into community service. This is my VC and startup evaluation investment is one of my other passion. And my two other partners, Satya Anantu, he works for Google, and then other works for Microsoft. This is also their passion, and I let Satya introduce himself and then answer any questions or add anything else.
Hey, thank you, Shankara, for walking through the investment. Hey, this is Satya. I work for Google. I've been in the US for over 10 years now. Worked at several tech companies in the US and in India. Like Shankara said, startups is investing in startups is one of my passions and has been hobby for quite some time. Hence, partnered with Shankara and Kalyan to start this up and run this. So this type of investments, it's not for everybody. It's high risk investment. For example, Neuralink. if you look at early stage startups, they're highly risky. They can go to zero or they can become very big. So there is this kind of risk associated with these investments. It's not like putting your money in S&P 500 where you can expect certain returns over a long period of time. So before you invest in this kind of investments, you have to be ready for that risk profile. Some of these investments can go to zero. Some of these investments can go to a very big number, or some might be somewhere in between. They can become 2x, 3x, whatever. Right? So that's the key thing you have to remember when investing in these companies. Shankara explained the structure to you. We create a special purpose vehicle for these investments. All you as investors will be members of that special purpose vehicle, and this special purpose vehicle invests in bigger VC funds. Those VC funds will hold the actual shares of the company. We don't directly hold, or our SPV may not directly hold the shares of the company in all the cases. In some cases, our SPV may hold the shares directly. So there is a chain of ownership in these investments. So that's where I would stop. And another thing I would like to add is the venture capital investments. They have low liquidity. They don't have the same level of liquidity like our other stock market investments, which means you cannot invest today and try to sell it after a year or two and get your money back. It's very difficult. One, because the number of investors that can invest in these kind of deals is limited. You have to be an accredited investor or higher to be able to invest in these kind of investments. And the value of these investments, it's hard to determine because there is not a very active market like stock market. There is no, price getting updated every minute or every day, whatever, right? So invest in these venture capital investments when you are okay with the risk level, and two, you don't need immediate liquidity. Some of these companies might take a decade to go to IPO. So you have to patiently hold the shares through that holding period to see the returns. And it's not very difficult to get out of these investments quickly. I'll stop there and happy to answer any questions you might have.
Satya, thank you. I just want to add something else. We have around 1,000 limited partners in our company, and around 500 of them have, more than 500 of them have invested at least in one of the deals. We have around 10 such SPVs that we have formed. We may reuse the SPV if, for example, if we do Neuralink again, we may reuse the same SPV. So that is the size of, and then as far as we've raised probably more than 15 million with these more than 500 investors. We'll stop here. Hannah, please take over from here. If you have any specific questions, again, we want to thank you all for joining.
All right, thank you all for sharing. Are you able to hear me?
We can hear you, Hannah. We can hear you.
Muted.
Please go ahead. Actually, we can hear you.
I can pull up your question and we're able to answer it right now. Like, no?
Yeah, you guys can feel free to ask any questions. We're happy to answer. At least that's an indication. I mean, let me ask this: like, does it make sense, or did anyone did you all understand what we are doing? And I mean, maybe a question for me is like, how many are have an exposure to VC?
For people who are, they can forward a question to us and we will forward to you.
Yeah,
You can
let
just
me
trust
actually
me
Hannah,
of your email address.
Hannah, one moment. Steve, is it the same Steve I met in Boone with Ricky?
Shankar, yes. And Stephen, yeah.
How are you, Steve? How are you, Steve?
Fine. How are you?
I'm doing well.
Thank you
I'm
for
doing
all.
well.
Okay.
Yeah. Okay. Because I guess they're still trying
Hannah,
to
you were saying
understand everything.
Hannah? Sorry, I may have missed something. Did you say something, Hannah?
Yeah, she was cutting off a little bit. I was not able to hear for the most part.
Okay. Looks like she said we'll get the questions in email. Usually that's how it is. That's what they let them. Steve, do you have any questions? I mean, give us some feedback. How the did it meet your expectation?
Yeah, I'm not sure like what question I need to ask. I know very little. Just get some idea. But yeah, I can send in my email address to you, to all of you. Maybe I need to get a little bit more information to digest. Let me send out.
Sure, we can do that. We can definitely. I mean, we have our VC. Like, I mean, the best source of information would be vibu.vc. That's what is being displayed here, and then if you go to Neuralink on top of it, you get
Okay.
you get details about this particular deal.
Okay.
I mean, the hyperlinks that are shown below are very, very valuable because you see some useful links at the bottom of the page on this Neuralink. It's a very good place for you to start. And I would say like you could also go to internet and then search a little bit on VC if one is not familiar with VC investing. And then any specific questions we'd be happy to answer, whether through email or any phone.
Yeah, I appreciate it for your share. This is very important information. Yeah, let me get some little bit more information from your website.
Sure.
Okay. Thank you for introduce. This is a very important opportunity.
Yes. Actually, let me tell my story. Like, I was very keen on investing in SpaceX. That's why. That's how I got interested in them. And but SpaceX is a very mature company at the moment. When we invested, but not all startups are that way. Neuralink is promising, but it's a different kind of investment. The risk is very different at the moment. So is the valuation as well. I mean, for example, when we started investing in SpaceX, it was more than 50 billion.
Hey.
So what I'll do is like I'm assuming that there are no additional questions. Thank you, Steve, and I really appreciate that. And then I want to thank Ricky for arranging this. Ricky is a wonderful man, and it's been a great journey for us to know Ricky and work together. And then thank you all for joining, and Satya, thank you for joining as well.
Thank you,
I'll give
Shankar.
one more minute. I'll give one more minute to see if anybody else has any questions.
Thank you,
Yeah,
Shankar.
thank you, everyone. Happy to answer any questions. This is a new area of investment for most people, right? Most people are probably invested in stock market, mutual funds, and ETFs. This is a very different kind of investment. So please feel free to send any questions you have. We will answer those.
Okay.
For the clinical perspective, this technology work for, let's say the Alzheimer's disease, right? is a kind of one of the application for this technology.
Hi, Fang. So, Satya, were you able to get it with the question again?
Yeah, I think he was asking about the application of Neuralink technology. Yes, I believe that's one of the applications for the technology. In the Neuralink page, we have given some links of information of what Neuralink has done so far, and they received approval for human trials and so on. So yes, that is one of the applications. However, that's where the risk is, right? Human trials are still not done, and whatever the technology is not completely approved for human use. So that's where the risk reward ratio lies. If that is completely approved by now, the stock price would have shot up. Now, because the trials are still in progress, the valuation is at a certain number. Right now, the valuation of the company is about around $5 billion. Let's say the human trial is successful and Neuralink is able to apply this technology successfully to some of those diseases, then we would expect the company valuation to go higher. On the contrary, if the trials fail and Neuralink is not able to apply the technology to cure those diseases, the valuation might go down. So that is the risk you are taking in this case. It's a game of patience. You want the company to be successful, hence the valuation to go up so that you can profit from the investment. However, the opposite might also happen. So that's the risk you should be willing to take with this investment.
Hi, Yulin. Did it answer your question?
Yes, I think so. Yeah, thank you.
Thank you. Actually, I have a question for you. Like, would anyone want to introduce yourself and then say what you do? I'm just very curious what kind of what you all do.
Can you talk to me?
No, yeah, please go ahead, Yulin. What do you do?
What I do, I do a lot of things. I was a doctor, and back to a long time ago. Now I doing to the difference, do the investment. Most like it's in the real estate investment kind of things, Yeah, Ricky, introduced me to join this, so meeting. I feel like, well, this new technology could be, it's just try to get new information from this meeting. I think this should be very good, exciting technology, especially what I'm talking about, the Alzheimer's disease. Now there's no way to treat the Alzheimer's disease, in this world right now. So I think if this Neuralink technology, I think as you guys mentioned, maybe this is one of the application, for this technology. I think that should be had a very good market in the potential market. So I think yeah, that's
Thank you, Yulin.
Yeah.
Good to know you. It's pleasure meeting you. I think if you're investing in real estate, this is a very different one. It's kind of diversifying into different fields. Anyone would like to tell us what you do, so we know the background and a little bit?
Hi, this is Yi Liang. I don't have job now. I was a data analyst before. But I studied nutrition in college and master in computer science. So I do all kind of jobs. So yeah, thank you for this opportunity.
Thank you, sir. I really appreciate you telling about what you do. All right, everyone. Thank you very much. Like Hannah, we could close the call, and then we'll be happy to address any questions in email or any subsequent calls or conference calls.
So this is kind of like the angel.
Yeah, thank you for everyone. Thank you for sharing today.
Sorry. I think it's somebody asking a question. Please, can you hold on for one moment?
So this is kind of like the angel investment.
Angel investment is usually it's done in very early stages. I won't call this an angel investment because the company has been around for a while. The product is demonstrated already in a monkey, and then it's been approved for human trials. So this is more of a late stage, I would say. Satya, how do you characterize this?
Yeah, you're right. So let's differentiate those things, right? So for angel investments, let's say I am starting a company. I just have an idea and I want to start working on it. I put some capital myself. The idea is taking form, and I go to Shankara and ask him, hey, do you want to invest in my company? And Shankara says, okay, I will invest $10,000 or $100,000, whatever. It's in a very early stage is when we call it as angel investment. That is the highest risk you can imagine. It's just in the initial stage of the company. There is no product yet, nothing. Angel investors just like the idea, and the founders, they invest in the company. That's the highest risk. Those are the kind of investments that can really go to zero or explode to 1,000 times or 10,000 times, whatever. As the company progresses, the type of investors will differ. When the idea takes some form and there's an early product and some customers, then early stage, the company is called an early stage company. And when it grows even bigger, it's called growth stage or late stage companies. Neuralink is more of a late stage because there has been a product. There were quite a few investors in Neuralink already. The product, there is some product, it's not complete yet. There is some product. So this is more of a late stage or growth stage investment. So another difference I would like to note here is primary versus secondary investments. I think Shankar explained that a little bit when he was talking. A primary investment is when you go to the company and directly invest in the company. For example, if I had $200 million, I could go to Neuralink and talk to them and say, hey, I want to invest $200 million in your company. So negotiate the terms and invest directly in the company. It depends on the size of the company. If it is a small company, I could go with $500,000 or $1 million in early stages. Neuralink is big now, so they would only take very big investments when you go directly talk to the company. The kind of things we are involved in right now, somebody has already invested in Neuralink and we are buying shares from them. So these are called secondary investments. We either buy existing shares from employees or investors that have already invested in Neuralink. Those are called secondary investments. The nature of this investment we are offering is secondary. So we are buying shares from existing shareholders of Neuralink. In these cases, we don't need $100 million, $200 million. We could find somebody who is willing to sell maybe $2 million worth of shares from their hold. So that's a secondary investment.
So what's the minimum for us to invest? And how many times do you think the revenue we will have?
Yeah, so the minimum investment for this per investor, it's $20,000. So for the SPV we are creating, like Shankara said, we can have maximum of 100 investors in that SPV. So each investor brings in $20,000 or more. So we could, let's say there are 50 investors. 50 investors times $20,000, we get about $1 million, and we take that $1 million and invest in the Neuralink shares.
Okay, so because we are kind of late stage, so investment. So how many times possibly do you think for the revenue? I don't know, the growth.
Yeah, I don't think Neuralink has stable revenue streams yet, right? So it's difficult to express in that form. It's more of a research-based company. Once the trials are successful, then they would see revenue, and we can express it as a multiple of revenue. But given at this stage, I don't think that's the kind of investment we are making. Shankara, please add to that.
No, you're right. I mean, I'm not familiar with any constant source of revenue at the moment. I mean, so we are essentially, once the productization is not yet there, they're demonstrating the technology at the moment. So the next step is what kind of products they come out with. Probably they're a few years away from this. This would be a long-term investment.
Yeah, for example, SpaceX, we do know some numbers, at least based on talking to other VCs and the data they have. But in this case, I don't think we can vouch for any revenue numbers.
Okay, thank you.
Thank you, Yiling. Good question, and we'll give one more chance for anybody else to ask any questions. Mandy, Dr. Luke, feel free to ask any questions. All right, then I would assume that you don't have any other questions. Thanks again, everybody, for joining. And Hannah, appreciate you administering this call. And then again, thanks to Rick Lee for making this happen. Thank you, Satya.
Thank you, Shankar. Let me ask the last question. You say investment deadline is December 3rd? I mean, like 3 days only?
Correct. So, Steve, usually these are very short time frames. In fact, like we came out with this 10 days ago. We lost some time in since we are doing this first time for your community, for Ricky Lee's network. We got started a little bit late. That's the reason it is. It was like that. In fact, when we did the first investment, SpaceX, it was 1 day. We had only 1 day because the demand was so much that we were given only 1 day. So here we have three days. I totally understand it is new, but this is how it works. Like when the deals open up, they are available for only certain small time. And then also, I want to let you know that we go from a reliable source. We have done business with this over the VC that is holding the shares. We've done business with them in the past. So we know that they are reliable. We have done business with them in the past.
Okay. Mm.
And
Thank
then
you,
one of
everyone.
one of the other thing that we do, I should have mentioned this earlier. We invest our money in this one. Every deal that comes across, we don't ask anybody to invest as a general partner. Like we are required, and then we do invest in every opportunity. So we put our money as well. So we take the risk along with you. And then in fact, we invest only when we like the opportunity. But again, everyone's risk profile is different. You need to see if this kind of risk is appropriate for you and how much you want to invest. What percentage of your portfolio you want to invest in this.
Okay, got it. Sandra.
Thank you. Thank you all.
Thank you. Thank you. Okay, I appreciate it. Have a nice day, everyone.
Thank you. Bye.
Bye-bye.
Thank you all.
Thank you.
Hannah, I'll hang on here if you have any questions for me. Hannah, I'll sign off unless you want to ask any questions.